Good afternoon, everybody. Hope everybody had a good day. Doing the stream a little bit later today. I had some things to do. So, starting off with Tesla. Tesla was our big earnings for the day, guys, today. So, look what happened, right? So, the expected move on Tesla was just about 6%, just over 6%, 6.2. And that's kind of exactly what we got here in the after hours. Remains to see how we open tomorrow. But for now, we kind of are holding that 6% downside. Kind of a bad day for bulls here, as the headline shows here, right? They got a little hit on margins here, gross margins coming in right at about 19%, which is lower than what we've been used to, right, over the past 2 years when they were in excess of 20%, 25%, and whatnot. And this has to do obviously with their scaling, what they're trying to do, right? So they're trying to bring their operations to scale, and in doing so, what they're doing is they're pricing out the competition. So this is a case of bad that's good for the long term. So it's bad in terms of short-term margins, right? You got the margin compression, but it is good in terms of a long scale scaling strategy in which they're really trying to reduce prices to attract the most amount of demand possible as they scale up all these different factories. And in doing so, the other automakers, right, they have significantly less margins than Tesla does, especially on their EV divisions. So Tesla is literally right now pricing out the competition by going down this strategy route. So short term bad, long term good for the company. Still bullish on the company on its overall prospects, but obviously share price here is going to take a little hit. But that was to be expected, guys. I mean, we did already know about the prior price cuts all throughout the quarter, and we also saw the delivery numbers that they did come in a bit lower. So really, no surprise here to expect some downside on Tesla stock. At least we were kind of staying within the exact same range that I was kind of saying, guys, right? So we're still kind of within this range. Now, the very important level right here is this level right here around the 163, 164 level, right? We really want to see bulls able to hold this level. If not, undoubtedly, guys, we may have to go down and fill this gap, right? It's unfortunate to say, but if price does break below here, then the next obvious level that we will be looking for is a gap fill around here. Obviously, if you're bullish, don't really want to see that. But however, guys, in the large scale of things, right, this would still be setting the monthly higher lows for potential further upside. These longer time frames, once you're in a monthly downtrend, unfortunately, it does take quite a while for that to reverse in a significant manner. So, hope all you Tesla investors are okay. I wouldn't be too nervous about it. Elon sounded pretty bullish on the call, even though he was slightly less energetic than usual. But yeah, we'll see what happens tomorrow with Tesla. That's now two companies, Netflix and Tesla, that are kind of struggling here in the midst of this, the recession climate that's been had over the past couple months now discussion. So moving on to the NASDAQ. NASDAQ, once again, very, very uninteresting day on the NASDAQ. The gap down today was bid up hard by the bulls. But as you can see into the late end of the day, we kind of gave it up. And this is pretty much all the result of Tesla earnings and negativity following that. So very uninteresting day considering we're still stuck in this big range right here. Like we've been talking about, this range is going to be making or broken with the earnings from the big tech companies, most likely on the NASDAQ. And there's really nothing else we can do, guys, but wait and see. So, as we consolidate further, it is still a weekly bull flag. However, bulls are going to need some positive catalysts now to smash this through. It stands to argue that if most of the major companies report less than stellar earnings or less than significant, that they're not that great and their guidance isn't that great for the year, considering a weaker consumer, then I assume that come next week, we are going to expect some further downside into some further weekly consolidation into these support levels. Still, nothing to be nervous about, right? Our weekly higher lows are still way down here. So if we were to do some consolidation like this over the next few days, potentially into next week as well, when we have the large companies reporting next 2 weeks even, right? Or our major tech names. Wouldn't be surprising to me to see that weekly consolidation. So just expect that, guys. Expect that. The most, expect a right now I'm kind of sitting on the fence, kind of sitting on 50-50, right? Really depends on what happens with earnings. If anybody tells you they know definitely which way this range is going to break, I wouldn't trust them, right? So you really got to take this on a day-by-day basis, see how the markets react. But for now, still in a bull trend, still riding that daily 12 EMA on the NASDAQ. S&P 500, kind of looking the same. S&P 500 was kind of being supported by further asset rotation. And this is good. This is really, really, really good, right? So we're holding the higher levels here. Unfortunately, You know, our loser on the day today was pretty much tech, but we did have, so QQQs, right? So like we were saying with the NASDAQ, tech was our red sector today. However, financials put in another really good green day. You know, nothing significant, but still just grinding higher here. And healthcare, we did also have a green day, kind of bouncing off this 12 EMA. So the major components of the S&P 500 are looking fairly bullish. You know, for the most part, most of the financials are kind of wrapped up. We do still have the credit card companies. I'll be looking out for American Express tomorrow. Very, very interested to see American Express's earnings because they usually target a higher end consumer than MasterCard and Visa. So if they can say that the consumer is healthy, if they can report very decent earnings, decent margins and whatnot, I'll really be looking out for their guidance and what they expect over the next coming quarters because I think it's going to be very, very important. The credit card companies, don't forget, guys, that they have a lot of data on the consumer that is very, very important, very noteworthy to see how the consumer is spending their money. Are they tapering back on spending? Are they spending the same? How are their credit levels? So these are all really, really, really important factors, especially when we're coming into a few quarters now where they're talking about the economic recession. So that'll be for financials tomorrow. Very, very interesting day. Healthcare, you know, some of the names, it was a green day today. Johnson & Johnson obviously had their earnings yesterday, pulled back, and this pullback was like picture perfect, right? We had this big gap to fill. It almost filled it entirely. Today, we kind of gapped up higher, and we stayed within this large candle. So we're kind of be looking for some further consolidation on a lot of healthcare names. We also see UNH, which is one of the largest components, right? They didn't have a good day at all. Not a good day at all. So UNH, unfortunately, right? It is currently trying to reverse the weekly time frame here, right? We are still trying. However, the bears are now cutting deep into this upswing. So we really want to see how some of these names level out, especially if you want to see further continuation in this sector right now. It's going to be hard for them to do it. You know, potentially we might see some further weekly consolidation like this in the healthcare sector as a whole, and then a further push up, which would coincide, guys, with our SPY needing to do exactly what what we were talking about on the NASDAQ, right? So weekly consolidation is not off the table, especially struggling off these ranges. If you look at XLF, the move is kind of getting, well, it's getting a tiny bit extended, right? You would expect to see some bears start to come into action here. You're starting to get the 4-hour time frame slightly overbought here. And the daily, even though it's not overbought, we have retraced almost 50% of this entire move. So you could expect some degree of pullback, especially awaiting further upside, right? So I wouldn't be surprised, guys, if we do see some weekly consolidation. If we don't get some really good earnings from tech, and if tech can't carry us higher, the most likely scenario for me becomes at that point weekly consolidation. We're going to look to set the weekly higher lows. Nothing really to be nervous about, though. It's just traditional market movement, right? Let's move on to IWM, the Russell, the small caps here. Small caps kind of did not have that great of a day, guys. I mean, very, very tight range. We've been, almost doing nothing now on all of these indexes for a better part of the last 2 weeks. It's kind of, as I was saying in my prior videos, to break such significant areas of resistance on the S&P 500, right, and on the NASDAQ, you need some big data or some big macro data to give investors confidence to take that level. Because once they take this level, guys, the next plausible scenario is they have to sit on this level and have the confidence to push the market higher. Or else we're just going to do something like this and just range a little bit higher, right? So to get it really trending, investors need to have this kind of unilateral confidence behind the market. So now it is still bullish, but kind of running out of steam on the current move, in my opinion. So the Russell, we are still looking for trades in this lower bound range here, like I've been saying in my previous videos. So keep an eye out for that. But for now, we're kind of absolutely doing not much, right? We're not able to pull through with the daily confirmation, right? Can't confirm the daily uptrend too much. We're kind of double topping right here. We'll see what happens for the remainder of the week. But for as the moment, I wouldn't be opposed to looking for more trades. And this is what I'm going to be doing for next week. Potentially, if the market does start curling down for some more accumulation in this zone here, we are going to be looking for some trades here in the 170 to 165 area for the short put side, right? There can be some very, very good opportunities to be writing options down here because there's a lot of support at these lower ranges. So moving on to crypto. Crypto also did not have a very good day at all today, guys. Bitcoin, as I was saying yesterday, we did take that relief trade. We did get stopped out pretty much overnight, right? So I was saying, guys, how we took the trade from here. We took profits here at our first target. And then I put my stops under here on this candle. And, we did get further upside continuation. My profit target was slightly higher. My second profit target, 30,750. Didn't make it there, unfortunately. Cup and handle kind of did fail. And then we rolled over with some bad news out of Asia. I forget what it was. I think it was it Japan, I believe? Somebody considered Bitcoin an actual security. And Bitcoin, whenever that happens, whenever you get regulation around crypto, right, the price never likes it too much. So that's what happened on Bitcoin. Unfortunately, we did get stopped out of the second half of our position, but higher than when we entered. So we locked in the profits here, locked in the second half of the profits here as well. So it's kind of as if we got the whole trade out here. So now we're pretty much back out in cash for that trade, awaiting further entry. And guys, we still have this massive area of support to be basing ourselves off of, right? So it's not all said and done for this move on Bitcoin. I'll still be looking out for consolidation on top of this range. And if we consolidate here, guys, if we can consolidate here, use it as support, and get rid of some of this big volatility, like these big red days. You never want to see these massive red days come into an area of support. So we'll see how the bulls are able to defend this area. Very, very important to see how they try to start to do it, right? So what the trade that I want to see is I want to see a reversal of the hourly time frame, something like this, and then I'll be more confident entering based off of this support level. Ethereum really kind of got washed today, right? As you can see, guys, right now down 8.21%. The day is not over yet. So we've kind of at this point engulfed this entire move. And that's not something that you really want to see, especially if you're looking up on the higher time frames here. When you get an engulfing candle on the weekly like that, it doesn't show for good continuation to the upside, at least in the short term. But this is something that we knew, right? The big area here, 2100 to 2000 was a very, very big area of resistance. It would have been very tough to smash through that in one go. So the likely move might now just be to consolidate further and then make another swing at it, potentially with the rest of the macro market. So we are going to need some macro bulls to step in here if we want to see some further continuation on these coins, right? We're going to want to see the risk on assets in stocks. So potentially some big moves in the mid caps and small caps. We want to see Wall Street get behind the risk on trade if you guys really want to see these smash to new highs and keep smashing resistances to the upside. So still, we're still, don't get me wrong, guys, we're still in a weekly uptrend, right? Still a lot of space between our higher low here at 1400. So a lot of space for that consolidation, but you will want to see Bitcoin really hold this range, guys. You want to see them hold this support level. That'll be very, very critical to not go into weekly consolidation now onto the crypto sector. So if we're looking on to some of our major names, I'll go through these quickly because really nothing much happened today. Apple grinded higher, as we've been saying, guys, grinding the 12 EMA. Not much is going to be happening, right? We got some really big resistance areas up here. Earnings is going to make or break the rest of this rally, guys. So I personally am not buying Apple stock up here, especially not with earnings coming out, not when it's this close to all-time highs. I'm going to be waiting for some weekly consolidation on this ticker right here. As you can see, guys, now we've got 1, 2, 3, 4, 5, 6 green weeks in a row, excuse me. And you kind of, at least in my opinion, I don't like being a buyer of moves like this, right? I always want to see somewhat of a weekly pullback. And it's very possible, like we were saying, the S&P, QQQs, everything is kind of due now for some potential weekly consolidation. They have one of two choices, right? We either have to smash through big areas of contention, big areas of resistance on the indexes to give individual names the confidence to keep pushing higher, or we have to come back for some weekly consolidation, set some more support levels, cool off the lower time frames a bit, right? Cool off the lower time frames a bit, and then continue for a move to the upside. So Apple, my next trade area for Apple, if it does come down there, I'll be targeting the 155 area, all the way down to the 150s for writing some options on that. But for now, unfortunately, I'm not going to touch Apple truly, but still very, very bullish, right? It's all up to the bears to now prove to us that they want to do weekly consolidation. Microsoft, same situation, right? Exact same situation as Apple. Bulls still in control, grinding the 12 EMA higher, but we are getting stuck up here, guys. We're getting stuck. Why? Just like Apple and all the other and the indexes, right? We're running into some heavy areas of resistance, and with earnings right around the corner, it's really anybody's guess, right? If they're extremely bullish, smash the resistances, then we have new levels to play off of. If they don't, if they're kind of bearish, well, then unfortunately, we're going to come down to some weekly consolidation here. The 12 EMAs are around the 270 range. Tons of space for a, for a new higher low off of this. And it would look really healthy, guys. If we would come down here, right? If we come down right here, this will be in line with our support area, which was previously resistance. And that would actually look really, really healthy. So that's the exact area that I'm looking for trades in for Microsoft for some options. We're going to be looking anywhere in here, between the 270 to 260 area is the area I'm going to be looking for on Microsoft. So Google now, right? Unfortunately, Google for this week hasn't been a really good week. We've kind of been caught sideways within this range now, kind of like every other pair that I've been talking about now for the better part of the last 2-3 weeks, kind of doing a lot of nothing, right? We got the resistance areas up here, nothing they can do about it. Also going to be pending earnings. So we really want to see, guys, just like the other pairs, sound like a broken record at this point. Our positive earnings are going to allow us to push higher into this whole area of contention up here, right? That's where price needs to go. And if not, still so much space to set a new higher low, right? Still so much space to set it. We have our guy right here, right? It's just around $99. So Google as well. Google kind of a tiny bit high. I'm getting a bit, penny pinching here, but I do want to be writing puts in this green box when premiums are good, guys. Preferably around the $97, $98 range is kind of a good range for me. But, that would entail that we'd come right back down to our 200-day moving average, which is right around here. That's exactly what I want to see, right? So that's good for Google. Amazon actually was one of our more positive names on the day, but Amazon as well, right? We have kind of been stuck in the same trading area now since mid-March, right? So pretty much a month now at this point without really moving much in price, right? Only like a small little 5-point range. If you compare it to this, right? There's like no volatility in price right now. So Amazon, you guys see my green box as well. It's been very, very good to be writing some options down in these levels here. But ever since it's kind of creeped up to 100, I've been slightly less interested in Amazon, considering that it is carrying a lot of, it's lagging behind the other names. And the other names have run so much. So if Apple, Microsoft, and Google start pulling back, right, it stands to argue that Amazon won't just be an outlier and start outperforming. It will pull back as well, in my opinion. So what's going to happen here is, if it does start to pull back in a weekly consolidation, right, I'm going to be looking in the, anywhere from 92 to 94 area would be what I want to see, because obviously we do have a lot of space before giving up that entire weekly uptrend, right, as bulls have been grinding higher. And today was just a really, really good day for Amazon, but not much to say, right? Grinding the 12 EMA. The proving is on the bears, on all of these pairs. So they really need to show up, really, really, really need to show up tomorrow, guys. Let's go over semiconductors really quickly. So semiconductors, NVIDIA. NVIDIA, right? What can I say about this company? They just keep pushing. They just keep pushing, guys. Obviously, you see where my green box is, right? I cannot touch this stock up here. I can't do it, right? So I haven't been able to write options on NVIDIA since, in this range right here is the last time that I remember writing options on NVIDIA. For now, I've just kind of been, on the sidelines, kind of pending trades. I do have some long-term no-touch shares that I have, right, that I was accumulating in this area here. So these shares are now in profit, and I'm not touching them. It's just that I, as an active trading position, I can't touch this. Still, no sign yet for a signal to go short on it. We really want to see something like a big volume day where we get some sort of massive gap up. If I see like a plus 7% day, 6-7% day where we gap up and then just run all day, I may try to pick that short. But for now, if bulls just keep grinding higher, very, very tough for me to touch this pair, guys. Moving on to AMD. So AMD, a bit more structure on this one. As you can see, guys, we are holding this previous area, right? This previous area right here of resistance that's now support. We are still holding the uptrending channel. It's kind of messy, right? It's kind of messy. But, we are, you can move it down here if you want to respect this little doji candle down here in this one. So technically we are still within that channel. It's a range, right? It's never exact science like, oh, it's past the line. But if you obviously can't get too far past it. So we are still in this uptrending channel. It's been good. I do have a position on AMD, as a matter of fact, for short puts for the 85s. So I would be fairly confident in this pair. If we do get a retest of the 85 area, I wouldn't be too nervous about it. It would provide me at least some form of support to where I can write calls on it. And it is a lot, you know, in terms of the location of the pair, be a lot more attractive location than something like an NVIDIA, right? ON Semiconductors, this pair is coming right down into my level again. This is probably one that's going to be on the watch list either tomorrow or Friday for writing puts, potentially into next week. I never really like writing into next week unless the premiums are really good. So we will see what happens, guys. But as it gets closer to our target range here, it's going to be something I'm looking out for. TSM, obviously, they have earnings tomorrow. I put a yellow line here just in case, so I will be targeting this 83 area. If we do get some form of bad earnings tomorrow, we got a couple gaps to fill here. Obviously, this is TSM. Sometimes, a lot of the times, it just doesn't fill the gaps. But those are the areas that I will be targeting. We're obviously targeting this whole area, right, of support, which is slightly between $83 and $80, right? Right around there. So tomorrow, if we do get some bad earnings or something like that, I'll be looking on the options for some plays on TSM. Great company. I think that they can hold price, especially in this market. They do still have a lot of pricing power, so I wouldn't be nervous about writing options down there. Now, let's go over our 3 plays of the week. So the 3 plays of the week, guys, if you remember, the first one was Tesla. So Tesla, the 0.5% play that I wanted was the 162.5s. And as you can see, guys, even though we did get a fairly significant drop after hours, we should still be, you know, unless this thing really starts dropping tomorrow hard and we get no support from bulls at all, the 162.5s with 2 days left of trading left, you know, still going to be good. If we do get a sign, not a problem. We'll take it from there. We will write some covered calls immediately on the position, but we will be getting into some pretty good value, right? This will be right at the low of the range. I did say there was a gap to fill around the 150s, but with the premium that we were able to get from the covered calls, that should put our break evens down in the high 150s. And you really shouldn't be bad, right? So we're expecting, obviously, Tesla, if we do get a sign, we may have to hold it for a few weeks until the bulls show themselves again to regain some of these lost levels. But we'll see how they react. We'll definitely see how they react tomorrow on Tesla. So like I said, the area was 162.5. And guys, let me just get this out of the way. So usually I never write puts on earnings weeks on specific companies. But Tesla is one because it was at the lower end of the range of a large area of accumulation, right? It's like a 4-month range at this point. I felt somewhat confident at writing the bottom of the range. And like I said, it's not too far off of my actual buy zone for shares that I would not mind holding for the long term. So if I do get assigned on these, really won't be sad about it. Really won't be panicking to roll myself out of the position, if you know what I mean. So that's good for Tesla. Now moving on to our second play, Bill.com. Bill.com, as a matter of fact, most of the premium has already come out of this contract, right? So if you took anywhere between the low 70s, 73, 72s, most of the premium will have come out of that contract today. As long as this holds up tomorrow, currently in the 77, 78 levels, most of the contracts, 72, 73, are already 50% positive. Tomorrow they could possibly be 65, 75% positive. So feel free to take profits whenever. This was once again a very good trade. Assignment levels, obviously, $72, $73. And this stock, I really think this stock has room to move to the upside. So I may be disappointed if I don't get a sign on this one, but it's going to stay on my list. Stay on my list for something to continue to watch out on for writing options, because I do think that if we do get a sign at these lower levels, we can then get some nice kick to the upside and really get some juicy premiums on the calls here, guys. And the third one, Schwab. We're now out of Schwab for the second time this week. The first ones we had were the 49s. You know, on Monday, they were completely worthless. And now we wrote the other ones, the 52s, yesterday. And now the 52s were completely worthless. So I wrote the 52s for about 25 cents. This morning, I was able to close them out. This morning, around 11, 12 in the morning, Eastern. I was able to close those out for 4 cents. So they were pretty much worthless. So Schwab is now a position that's off the table. Next one that I'm kind of looking for is PayPal. I like PayPal in this range. Look at this accumulation range, guys. I really like PayPal down here. You know, very good value in my opinion for a company, especially comparatively to what they were trading. Very solid accumulation zone as well. And they still have earnings only in about 2 weeks. So we do still have some time for the remainder of the week and into next week to be writing some potential options on these. But you got to be careful, guys, because if the NASDAQ does start dumping, some of these tech stocks will just get dragged down because of that. So I'll be writing things a little bit more lightly coming into next week. Next week is going to be a fairly light week for me because I know that the large tech stocks will move potentially the entire indexes and really set the tones. So I'm pretty much closed out of most positions here. Still have a few contracts on bill, but I was able to close about half the position. Fully out of Schwab. And now we only pretty much have to deal with Tesla remaining this week. I was able to close my end phase position as well. Realized some really nice profits on that one, guys. They do have earnings next Tuesday. So I was able to jump out today and capture most of that premium that I wrote about 2.5 weeks ago. And we were able to lock in about 75-80% profit on that. So I'm really, really happy about that. Anyways, if you guys enjoyed the video, consider like, consider subscribe. I love all you guys. I hope you guys were successful in your trading. Don't get too nervous about things. Just remember, if the markets do start dropping, we are still looking for weekly consolidation, and we have a lot of space, guys. A lot of space to set the weekly higher lows. So don't get too nervous, you know, unless macro data starts to completely fall apart, which I highly doubt. We're moving in the right direction. It's going to be a grind. This year is going to be a grind up. I wouldn't be expecting some V-shaped recoveries. It's going to be a grind, but just be careful with it. Continue doing what you do best and just take it day by day, guys. I love you all, and I'll see you tomorrow.